terms of our investment strategy and our edge in the space is it took a long time to build, but really it was, we think there's a growing number of fundamentally focused investors in the space. And we think there's really high quality, technical and engineering talent, but there isn't a lot of people in between. And so we really spent the first kind of 2 years of Theia building the capabilities to actually, learn how to, code at a basic level. And then, work with teams like, we didn't start with Dune. We actually started trying to build it all ourselves. And kind of supplement the actual, investment mechanics that we had learned with the kind of latest in, data analytics and, using Python instead of Excel, to gather data, analyze it, and build models to understand it.
So what I'm hearing is basically you took all your knowledge and your data-drivenness, the professionalism of traditional investments that might be lacking a bit in the space at the moment, but we're getting there. And you kind of took that approach, and now you're using this new information environment where like everything is trackable. You can just instead of like having to rely on quarterly reports or like even only getting the data if you actually do buyouts or you're in some kind of like contract relationships with them. And now you can all do that on chain live in your data suite that you guys have built. So maybe to kind of like make this more plastic for the audience. Felipe, I saw that you put out this a Unibot thesis on Twitter. Yeah, maybe if you could quickly kind of explain like what Unibot is, and then like maybe what were some of the key factors that allowed you to make a decision and investment.
Yeah, so we made that thesis, that investment using purely Dune in our Dune backend engine. So Unibot is a Telegram bot and web app that lets you trade on Uniswap right now, and is integrating multiple DeFi applications in one UI. So if you go to Binance, you have the comfort of being able to trade perps and spot in one UI and get leverage and a couple other things. If you go to DeFi, you have to connect wallet with multiple integrations. That's fine for some purposes, but some people want to have the Binance feel on their trading when they're trading on chain because they're trading things that aren't listed on Binance. So Unibot's long-term mission is to have every DeFi application on their platform and to be a web-based application where people can trade and make it feel like a Binance interface. So when we invested, we had heard about Unibot. A lot of funds had dismissed Unibot as not interesting, but we really digged into the data and we saw that they were earning about $4 million a year in sustainable earnings as we defined it. And they were trading at below $30 million of market cap. So the kind of price to earnings ratio you don't really see in a traditional market for something that's growing over 100% APR a year. And then we double clicked again using Dune into the competitors, into the market, into the traders, concentration limits, everything we could get to see if those earnings were sustainable, if they were real, if it was a real product. And we made our investment based on that analysis. And since then, we've looked at our models that we built on Unibot within Dune and the dashboards with us and others, mostly others, really. We look at them every day based on our thesis. And when there's a new competitor launching, we look at it hour by hour to see how things are going. When there's a problem, we look at it hour by hour to see how the market's responding to a new product, the market's responding to any kind of issues. So it's really been a level of monitoring of our investment and accountability to our thesis that we can't do in any other environment than one where you have flowing data constantly.
Yeah. You mentioned earlier that, of course, you didn't start out on Dune, or said you didn't start out on Dune, I guess. So maybe if you could walk me through kind of the journey that you took from like the start, the fund started in 2022. So maybe like what were kind of like your baby steps? What were like some approaches that eventually like were not a good idea? And how you kind of like finally solved a lot of these problems using Dune?
So even just, in the 2 years that we've been managing this fund, we've seen the environment shift radically in terms of what's available, just in terms of infrastructure. We were, personally investing in the space, before launching the fund. And so had kind of built our thesis around the way that we needed to organize our investment strategy based on our experience at the time. And so we came in, with a very kind of detailed and, I think ambitious plan for what we were going to build. And we really did build it. And, so using our own, our own code base and, running our, data through our RPC nodes. And yeah, integrating with, 15 different APIs. And it was just like a really clunky system that took, our developer team just like all of their time to maintain. So that's where we started. Felipe, why don't you let's remember.
Since then, Dune has shipped a lot of new features, and allowed us to pay for faster queries, which made a big difference for us. And really, what we learned is that we overbuilt, because what we built internally, you built externally in a much better way than we can build or maintain in-house. So over time, even though we put all this effort into building our code base, we've been sunsetting pieces of it one by one, with the idea of going fully onto Dune as our backend, because Dune now covers everything we need on an analysis basis, or close to everything we need. And it's just much better for us to have one system where we keep all of our analyses, all our models, all of our dashboards.
And the other strong benefit too is you have access to everything that community builds as well. So it's in our own code base, we're a little bit more constrained by what we were building. And here you have the compounding effect, not just of your own work, but of the entire community's work. And from our perspective, we're trying to orient investing in this asset class around fundamentals and around, seeing the world the way we think, value should be derived. And so it's very helpful, not just from a data input perspective, but also output. When we build a dashboard, or when we work with a team to change their dashboard, what we can highlight to really to display the value of the asset.
I'll see. And to be specific, it's just a Dune dashboard for visualizations, and then an API feed to Jupyter Notebook for models. That's our entire backend now. So much simpler, much lighter.
Okay, that's great to hear. So I kind of heard there that you also leverage the power of the community of Dune, and kind of like you don't have to start from zero, but rather you can at least start on something. So maybe if you can quickly just like maybe a recent example like that you can remember where like I just like did this and then something or like I could just fork something. So maybe it's just something in
To
mind.
be completely honest, most of what we do is fork and edit, because the community's built so much.
Okay.
There will be an occasional project that we have to build our own dashboard for, but it won't be as good as something that somebody spent 3 or 4 weeks building and maintaining. So just to give you examples of things that we monitor every day, GMX, GNS, Unibot, Synthetics. I see Blockworks in the audience. They built that dashboard. Those things we when they're public, we fork and edit, and we'll build usually a parallel dashboard with the analyses that we like, because we don't always agree with the view that someone's taken, but having the data and having the code gets us 9/10 of the way there. And then we just make some edits. And then we roll into Jupyter for the model, for the investment model.
Yep, I see. Yeah, that's very cool. You're basically like, you don't have to do the hardcore like engineering work, like the data engineering work, even though it's just in query, but like figuring out all the events and like how that relates. But like in the end, you can kind of like take that work and simply like apply your metrics to it.
Exactly.
Okay, very, very cool.
And we find it easier to understand the functions and events reading someone else's code.
Right. That's always, we've all spent too much time in some documentation of obscure protocols, I guess. Maybe so going into like specifically how you use Dune, I think like there's like a interesting like granularity aspect to this, where like you can look at product metrics, and you can also look at like full sector, and then you can also like look at zoom in on different time frames as well. So maybe if you want to start with like a product sector, and maybe if you can think of an example, or like maybe like your framework around like how do we think about product metrics?
So that's part of the fundamental view, is that you need the data to be flexible, and that's one of the big benefits of Dune. It's flexible because everything is subjective at the end of the day, right? We think it's important to know some examples I mentioned. We think it's important to know that in GMXV1, 80% of trades were whales trading levered long Bitcoin and ETH. We think that's critical to know. Someone else might not have it in their dashboard, right? And they might not see that as important. effective for that. That for us, that really matters in terms of the return profile of GLP. You're selling long calls on Bitcoin and ETH. Who's using it? Why do they have such few users relative to the amount of volume they have? What does that mean if one of them or 10 of them are liquidated or leave from their platform? Right? That's risk analysis that we do on a subjective level, and we can only do that if we have flexibility and speed. Because if we have a question and it takes 2 weeks to answer, that cuts the train of thought. And if we can see an earnings number or revenue number, but not double click and explore, we won't be able to see that type of risk. Another example with gains that you mentioned is how much of the revenue is coming from, they had stocks on their website for a while, right? And they've since removed that from their application due to regulatory risk. And one of the main conversations we were having with them is how much gross profit are you deriving from stocks? And, if it was half of your business, it's a much harder choice to make than if it's a very small percentage. In this instance, it was a very small percentage. So it's just very much about exploration rather than a fixed template. And that's the beauty of Dune for us.
And it's all different for a trading protocol versus a lending protocol. All the businesses have kind of different metrics that we focus on to ensure that, it's a healthy customer base, healthy revenue split. We also, a lot of our positions are pretty small cap. And so we also do look at, liquidity and wallet holders and, understand like the risks associated with that. But I think Felipe often makes this point, which is a good one. When you have all this real-time data, you have to be careful not to draw trends from everything you see that are too short-term. You have to balance the fact that you're getting all of this real-time data with the fact that, it takes time to actually see trends happen. And so, little fluctuations in behavior, it's basically our job to determine if that's going to be a trend or if that's an anomaly.
You can't sell because your company had one day or they didn't.
Yeah.
And like the 10Q usually is you find out 3 months later they had a tough week or two.
Yeah. So another thing is like, not only can you kind of look at GMX or gains or whatever, but you can also look at the competitors.
Yeah.
So maybe if you guys can quickly like present your framework for like how you look at that, I think that would be super interesting.
Yeah. And it's a very it's a great source of insight for teams as well. So going back to the Unibot example, there was another competitor called Banana Gun that launched. And they started taking market share. And the big question was, you got to find out immediately what's going on and address it. And instead of having to wait or find out through word of mouth or anecdotes, they were able, with us in conjunction, to see the data, find out that all of the volume going to Unibot was for new token snipers, and look at the code for Banana Gun and determine why that was a better sniper than the one that Unibot had, and determine also how much of that revenue was coming from people who were incentivized through token. So that let us diagnose the problem very quickly. And within 2 weeks, they had shipped a new Sniper Cup product and taken back share because of the analysis. When that started, they had no idea what the problem was, right? Neither did we. So that's the type of advantage that a fund can have, a hands-on fund like us can have, working with teams, but also teams can have looking at data to judge the market. And we think that's also going to get a much faster pace. The same way of open source allows a much faster pace of innovation because you can always copy code. Open data allows for much faster competition, which has positives and negatives, but it moves the industry forward because people know what's working.
Yeah, if something isn't working, you can just fork it. That's always great. Maybe in this new information environment, you are certainly not the only fund kind of like deploying strategies like this. So are you also like, if you do take an investment in Unibot, for example, are you also like kind of monitoring like, hey, who's like to the left and right of me to see like which other funds are deploying or like big whales or something like this?
Yeah, we definitely look at it. I mean, our fundamental thesis is more so about the company, and so what we're most focused on is company fundamentals, but we're definitely paying attention to like what is consensus and trying to avoid, consensus trades. So we're usually excited when other funds start buying what we're buying, because it usually leads us one direction. And we usually try to avoid things where you can just see it's a, cap table full of funds, on the list.
Yeah. So that's all really cool. But so what took you so long? And like, how can other funds reduce that time to actually get there? So maybe like, what were some of the challenges of like starting to use Dune? And also like maybe what was surprisingly easy? And just like, what would you say to other funds out there who would want to build themselves a suite like this?
Yeah. So for this room, Dune is not hard to use. But if you think about the profile of most fund managers and fundamental investors, it's usually some type of liberal arts background with then 10,000 hours of Excel in investment banking or private equity or hedge funds. So there's a little bit of an innovator's dilemma where, I did 10,000 hours of Excel and there was nothing I didn't know in Excel. I was at the top of
A true master.
Yeah. On Excel, that was the case. And then
Did you do the esports?
no, I didn't do the esports. But you have to drop that. You drop everything you know and start as a beginner and become the worst person in the room at SQL and at Python and at these skills. And it's a sacrifice to do that. It takes a few weeks in a market that moves very quickly. So, and oftentimes you're kind of late 20s, early 30s or older. So it's just that sacrifice of giving up what you already have a very, very good skill in and becoming the worst person in the room for a little while to learn the new skill. But it can be done. We've used Andrew Hong's guides. So which are excellent. That was the breaking point for us.
Okay.
Having those guides, being able to get through it.
Okay, that is great to hear. Great work, Andrew. So maybe we talked quickly before, and you guys also said this is a lot of compounding. Like your Excel models, they don't update themselves. So maybe if you can quickly talk about like what your strategy in terms of like your kind of like information systems are. I think that was like a really interesting insight.
Yeah, Excel models are just completely isolated. So it's like you build a model yourself. It's not standardized. You're likely the only one who can navigate the model well to generate outputs. And it takes a long time to build. And then it also takes a really long time to update because typically you're ingesting unstructured data that's not suited for the model that you build. So that lack of standardization makes, the private equity style of investing, which is incredibly detailed, really hard to use to draw real-time investment conclusions. And on the other side of, hedge funds, you build a model that, can usually, it's again, kind of custom in Excel, but can ingest the quarterly data for the company that you're, looking at frequently, but it's just on such a lag. And so, trying to build something that falls in between this, specifically something here, on Dune, you build a model and it's just constantly running. It's with some exceptions where protocols will make some updates, but it's usually pretty quick to update, just a click of a button instead of, a week of just like being deep in the model to like update all the different tabs and have it break and do it again. And so it really, like, that was one of our theses launching this fund, is that it's a much more scalable model for funds as well, to have your kind of underwriting be on this composable and, kind of standardized, back end.
And just to plug something, what that enables is a learning system on fundamentals, which is something that's quite exciting because going back to the synthetics dashboard that Blockworks built, there are prices at which we like that, but it's not based on the market price. It's based on the price to earnings ratio as we define it. So, we might do some work on that to decide, well, it's not interesting at this price, but if it goes down below, 14 times this ratio, it could be. And with alerts, we can have that running once a day. It doesn't have to be that frequently, but then we get a notification if it's trading at the right level or has the right amount of market share, or if some new product has grown in a way that we were hoping to see it grow. And then we can refresh the model and have a new IC discussion. So it's not a situation where we have to remember this company, we're looking at that, take a look. That's the way it's usually done. Here, we can build more and more models and have an alerting system that lets us know when the right metrics are being met.
Yeah, so it expands our coverage, and it also lets us know if something is going wrong at one of the, companies that we own. So, to kind of really immediately be aware when something's happening and then kind of click in, reach out to the teams, figure it out, and work together on that. So it expands our coverage dramatically. And especially on Dune, where it's like so many people have built so many things, we are just, if we like the team but don't like the number, evaluation, we can just set up an alert, just keep it, keep it back.
So you guys are very excited about alerts. Very good to hear that.
Very excited about alerts.
We are at time. I think we still have some time for audience questions. So if there's any questions from the audience, now is your time.
Hey guys, thanks for that. That was very insightful. You talked a fair bit about how the data from Dune can give you more possibilities for exploration in terms of like revenues as well as risk management, where you can then value the company with traditional metrics like PE ratios or modified versions that you guys use. I guess I'm interested about that last step. Once you've valued the company, how do you prescribe value to the token, seeing as it's not like a homogeneous system like traditional shares or assets? Like, how do you bridge that last gap? Because, you know, each token is slightly different. They have their own intricacies. So do you have a method of valuing that final step?
So we only look at tokens where we can ascribe value accrual to the token. So that cuts out, you know, when we started, there's probably a universe of 5 tokens we could have looked at. Now we think it's closer to 70. So that trend has been growing. It's grown a lot during the bear market as companies have not had easy money and they've had to give back value to the token to be able to raise funds to grow. So that market's been growing, but the answer is we only stick to the narrow subset of tokens where there is a link between the earnings and the token. And that doesn't have to be dividends. You know, like Dan said, Amazon hasn't paid a dividend, but it has to be some kind of cash flow flowing back to the token, either a treasury that's controlled by the token or an insurance fund that's controlled by the token voters or buybacks. You know, you have to be able to ascribe link to value. That's it. You don't want to be in a situation where, you know, the business is great, but the token doesn't get anything. That's just outside of our mandate fully.
But I think to the question as well, it's probably the least scalable part of our process is understanding the different token structures, because that's not something you can easily discern on chain. It's more of a qualitative assessment, and often what we spend a really majority, not maybe, you know, a large part of our diligence process is understanding to a really granular level how the tokenomics work, because that's a pretty important input for us.
No, I don't think it's too tough. But the alerting system you mentioned in the use case there is very, very intriguing to me. So evaluation metrics obviously seem like a great use case there, but I'm curious, what other universe of alerting metrics a metric that you'd like alerted to you? Would that be like, curious if like user metrics, like maybe active addresses or retention rates or things, maybe on like the risk side, like if it was a lending market and, you know, maybe it was like collateralization ratio or utilization ratio. Curious what you think about like alerting things outside of just valuation metrics.
All of the above. So it was an easy question. Yeah. If you're looking at a lending business, you have to be looking at collateralization ratios, concentration, potential situations like the one we had with Curve on Aave. If you are looking at a competitive business, you have to look at market share. You have to look at how that's grown or declined over time. You know, a 10% decline in market share over 3 months is a serious problem. Over 1 month, it's an even more serious problem. So you really do need to customize the alerts based on the specific thesis you have on the business. And that's where we get to the point that every business is subjective. You always require the analyst to look at it, but Dune just gives you these tools to kind of 10x the ability of the analyst to get output out or get information out.
And you always need to put the valuation metrics in the context of the broader market. So like these last few months, with the exception maybe the last few weeks, like it's been kind of a recession in like, especially in like EVM world where activities and volumes are just at historic lows. And so you really need to look at, you know, how similar businesses are performing across the entire ecosystem in order to understand like whether you're in the right, you know, in the right project.
For sure. That was awesome. Thank you.
All right. We are at time. Give it up for Theia. Where can people follow you? Substack, Twitter, anything?
Twitter. And next year we're gonna commit to doing a lot more open source models. We said that 3 months ago. We haven't really done it, but next year.
Okay.
So at Theia Research.
All right. All right. That's it for this panel.